Welcome back everybody to another daily recap. Today is the 14th of February and the big catalyst of today was the CPI. As you can see here, the year-over-year CPI data that came out at 6.4, which is lower than the previous one, but still higher than expected. And we're going to see how it actually affected the markets, especially on gold. As you can see here now, this is the start of the New York session. We are just coming right before the CPI release. And we're going to see what the price action happened with our old PSA market structure, market up, and the key levels as well. So let's have a look at what happens at the release of it. So as you can see here, as per usual, it's always better not to enter exactly 1-2 minutes after, and because you can get whipsawed really hard. So you see that we have almost 90 pip drop immediately in the first 1 minute, probably in the first seconds, and then we had the bounce from 1852 key level for more than, this is almost 200 pip up to 1870. That's where we have our strong PSA 1868, which was charted up already from the last few days. This is from Friday. It was always well respected, 1870, 1872. If we can actually go with an horizontal line over here. I don't know if this one is a candle close, or this could be the PSA. That's where we actually saw the rejection today. But let's have a look. So based on the fundamentals, we can expect still a mixed sentiment or a bearish side, because the inflation is still high. And it's higher than expected. The investors were expecting a much lower inflation, being affected much more from the interest rate hikes, but still not. So this can very likely be a liquidity grab on the upside due to the then confirmation of, okay, Fed will keep the rates at least the same, will not cut the rates this year or very soon. So we can see and understand this upside move as a liquidity grab. Of course, entering sells here would be very, very aggressive, because price can easily give you an upside to another key level before jumping back down. Or maybe we could have understood the market sentiment completely wrong, but I mean, that's not really the case. That's not really the matter. As a scalper, you want to see a clear price action before entering. So that's where, yes, you see price correcting all the way back down, and that's just confirming your idea. Of course, now it's already 90 pip, but if you stay focused on what already happened and missed, that's where you're getting stuck and you're not making yourself available for taking further sells. So as you can see here, yes, maybe exactly there, you got an idea of entering sells when the price was closing bearish. Maybe you had that idea because you said, okay, it's still high inflation. It's already been 1, 2, 3, 4 minutes. So maybe you had time to reflect on it. Maybe that's why you could have entered sells. But yes, you see it going under pip, and then maybe you get FOMO, or you're not in a very clean mental state. And apart from that, let me just bring this one here. And okay. What you really want is to have a clear mindset to understand, okay, where can I enter at the retest, or what levels, most likely here, what levels can I enter, can I have as a retest before continuation down. Could be below this level. So let me just chart them up. This, maybe below this level, or below the key level, or below the 1852 key level. The possible retest can also be 1859, because it held some sort of value. You can expect some sort of, I mean, if I was just looking at the price action, we made a new high, so maybe you say, yeah, you should look for buys at this level, simply looking at the price action. But when the fundamentals are in play, that's always to stick to the big fundamentals. So let's have a look at what the price actually is doing. So as you can see here, we have first bounce, so we don't have sells yet. We don't have the sells over here. Yes, as you can see, this one, as per price action, this would have been a 61.8 retracement, and this would be, I think, like a 60-70 pips pullback, but still understanding that the price sensitivity, the fundamentals are in play. So still looking for sells. We have a first rejection of this level, so that's where we could understand that possibly we are ending, but maybe you could take now, if there's a confirmation of the bearish bias, you can take this sells below 1863. Let's have a look at it. So as you can see here, we have a nice closure below the level, a retest, another retest, and let's see. Okay, now you are not very happy because you entered here and you are now in drawdown. Of course, your stop loss is above here, but let's see if the price is making a double top for possible further confirmation. And as you can see, price made a double top exactly at this level as expected, and continuation down. So now we are also, because this one, okay, the entry would have been too close to the new 4 hour. With the new 4 hour making the top weak and failing to break above. Let's see if it's also a PPL. Yes, reaction exactly at the PPL. As you can see here, the double top is exactly at our PPL. So that's where you could have taken your further confirmation of the sell bias and for the continuation bearish. Let's have a look at this like this. Okay, and the continuation here. And let's say you entered here at this candle. Of course, now the ranges are bigger. That will have been down to these previous lows. Let's see. Let's 3 to 1. Maybe you can place it here. Yes, that's a. Okay, that's a 3 to 1 risk to reward ratio, and that's where you take your first entry and you stay up. Now, of course, you are coming towards New York Stock Exchange Open, and you see that's with the fundamentals. That's your trade idea playing out with the fundamentals. Even in case you maybe you had a tighter stop loss because that was too low, maybe you enter below here, or maybe you didn't actually enter at all, you have this double top here at this level that makes all the sense in the world. You had the rejection, as I was talking about, the confirmation of this double top being the retest of these lows, and that's where you also have the retest, multiple candle retest of this 1859 PSA, which, as I told you, was holding some strength as per price action, and that's where you could have had your further entries. Or yeah, that's still under pip entry. So maybe you had your first entry over here, and that's where you can easily add some position. Let me just select here. You could have added some position at the multiple rejection, maybe possibly very likely to be like that, where you can add a position to your winning or enter further scalps. And again, the stop loss would have been need to be above this previous PSA, and always have like at least a 3 to 1 risk to reward if possible. As you can see here, would have been tapped in the very next candles. As you can see, even way more. So now if you're coming to the charts now, and okay, that's New York Stock Exchange. We are already way back down, we're 80 pips below 1852 key level. Of course, now this is a possible candle to entry because it's like a 50 pip candle. And yes, you have a retest, but you don't have a retest of the previous PSA. You have a retest of a PPL, and it's very difficult to enter. But this double top was absolutely amazing. Okay, and spotted beforehand. So let me just place it like this. Okay, sells over there, but I want it to go to the back. Okay, so now what are the possible price action that you want to see as a scalper? You might want to see a full retracement of 75%, like for example, or to these previous lows, but to these previous highs. Let's see if price will give us opportunities. We can already see a first rejection. What we can do is, okay, is this rejection coming from a strong 15-minute price action? Price sensitivity area, sorry. For example, like this, and let me go on the 15-minute. So that's 1843. We can also see when was the last time that we actually saw it, and let's see the rejection that happened over there. Yeah, we can see that we had some price sensitivity exactly at this level, not really that much. It's not like these previous lows. If it was like these previous lows, then it would be much more relevant, but still is some sort of price sensitivity area. So what I want to see is, okay, if I want to stick on the bearish side, I have two possibilities. I can think about, okay, this is a retest of these previous lows. Look at this candle, and that's where you can take a quick scalp down to the same lows. And so even if it makes a double bottom to go then on the upside, we can still have a nice scalp, and that might also be a good idea. But as an overall high time frame correction, that would be you will wait for the retest of at least 50% or 65 or 61 or 75% retracement. Let's have a look at what happens actually. Okay, you have a quick jump back down. This is still a 40 pip scalp, but then you see that already the candles are getting engulfed. Price is staying above this previous price sensitivity area. So if you didn't take any profits as a scalp, you could take some measure. So like putting the stop loss at break even, because now, okay, you see that the price action is not very good. So maybe if you were looking for a scalp down to the previous lows, that would be, yeah, 20 pip. This will still be like almost a 2-to-1. Let's say you entered there, you wanted to go all the way back down. That's a break-even trade. And we want to have a look at what happens at these levels of interest for the retracement, if they gives us opportunities. So this is a 50%, but doing this high, I would love to have the retracement to those higher levels and not just enter at this first candle top. We can see some sort of rejection, but okay, not really big bearish kind of engulfing. So I would wait for some confirmation for sellers. Still very strong price action, no need. There was no reason to enter at 75% retracement unless we start seeing some exhaustion from the buyers. And we can already see it from the size of the candle getting smaller and smaller. Now we have this first candle confirmation at this PPL, which is just 1 PPL below those previous level. So then we might see that if we close below again, either this level or below the 75% retracement, then we can take the continuation down, or even wait for the same price action to play out with a double top at this level. Because now we are into the new 10 AM candle, and that's where you could take your entry. Of course, if you enter like this very aggressively, remember that your stop loss should be above this previous PSA to be valid, but you can still have like a 200 pip or even 3-to-1. That's a 3-to-1 would be to the previous PPL. So as you can see here, yes, price action is not very good, but we failed to make a new high. We're staying below this level. We can have this first confirmation over here. Price staying below this level as expected. Possible entry below 75% retracement are the safest one. So you have this first one with the price going below. That's a stop loss of 40-45 pips, still 3-to-1 ratio if you want to keep it. Or another one below this below the 75%, like here. Now this stop loss will be quite tricky, will be above this level, or will be really quite tricky. So I would love to have this double top as expected, even here as I was saying, and a further kind of confirmation over here. Now the stop loss will be higher, and therefore the TP should be higher, unless it's like a 50% position, so you're not really taking it all the way back down, so you're not risking that much. As you can see here, we have also a nice breaker retest of the key level in continuation down. So this one would be in profit for 130 pip, and the second entry, which will be below this first level. We can also have this before this level. The only thing is the stop loss is quite weird on this 75% retracement unless you enter. If you enter here, let's say you enter this candle confirmation, which is a 75% rejection. That's in this case that would be okay. So let's put it like this. You can go here on the left hand side and go like this, and you can go where it makes sense to have a stop loss. That's exactly there. And let's see where the price action is going. So these one are in profit, these one are 3 to 1. You can also take profits at the same level. It's a 2.5. Unless, especially if you see that price actually fails to break below, but in this case it looks like we're still going bearish, so that's good. Now you see a double bottom, so maybe you exit at this level, and it's still at 2.65. This one was even higher, so we are still very good to go. We are still in a bearish trend line. As you can see here, we can only see that we might break if we see a break of this previous market structure and a continuation up. So that's what is actually possibly worrying. So this was the level, but as you can see here, price actually went all the way back down, 3 to 1, tapped, because you never saw price breaking above this level, breaking above this previous PSA. That was this one. So that was the confirmation for for keeping your sales going, and also break below these previous lows, and that's where you had your full TP getting hit, and that's absolutely awesome. This one as well. This one you will take it at 3 to 1, more than 3 to 1. 3 to 1 would be like here, so it's fine. That's also 3 to 1. You can put it like 100. I don't know what's it. Okay, like this. Yeah, 3 to 1 will be with these lows, and really keeping the bearish momentum going. Now we're making a double bottom over here at this level, but that's where you could have, by keeping the same bias and understanding the price rejection and not entering too early, that's where you could have taken this entry and your sales scalps. And yeah, that's pretty much it as per price action and per fundamental. So that would be in total a lot of pips from today alone, based on the fundamentals and technicals. You see that the price is actually moving very, very nicely and quite in a structured manner, as you can see here, in a way that you can even not expect, but that is not absolutely out of the ordinary. So we have here this double top at this previous low, this previous same highs for the confirmation of sales, and then you have a break below this level, you have the break below this previous PSA. Also look at how clean this is, the retest of exactly these lows. Might also be a PPL, no, it's not a PPL, but you have the clean break and retest of this level, then you have a break and retest of this level, then you have a break and retest of this market structure, then you have this one, and yes, if is weak but is not breaking any structure, and then you have lower high, lower low being printed. Yes, now it's getting less impulsive because the market structure is there, lower high, lower low. So that's where this could be possibly be like a 75% retracement, because the markets are going slower. See, and the volume is still there, but the volatility is not. So 75% retracement, as you can see on the dot, and probably also over here, yeah, 61.8 on the dot, and that's where you have all your confirmation from the price action. So that's pretty much it. We have a double bottom over here, So that's the overall understanding of fundamentals plus technicals. So I hope you guys enjoyed, and I'll see you tomorrow.